Are you looking for a loan that basically is based on your credit score, the loan to value, and the cash flow of the property? So let's say you have a bunch of rental properties and you're trying to get conventional loans. There's ways to negotiate that. You can even get a 1 or 2 year prepayment penalty, but they are more commercial-ish loans, so expect to have a prepay penalty on these loans. But if you're looking for long-term fixed rates and you don't want to go the bank or credit union route because they're going to scrutinize you from a global cash flow perspective, these are a great lending tool to know about.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Bo Eckstein.
Hello, and welcome to another episode of the Investor Financing Podcast. And I'm your host, Bo Eckstein. And today we're going to talk about investor cash flow loans and how they work. So let's say you have a bunch of rental properties and you're trying to get conventional loans, and the banks and underwriters at these conventional loan, they'll underwrite the deal, but they'll only use 75% of gross rents, and maybe you're W-2 or maybe you're self-employed. It's very hard to document your income or give you enough income to qualify based on their underwriting standards. So if you're looking for investor cash flow loans, which really means, are you looking for a loan that basically is based on your credit score, the loan to value, and the cash flow of the property? So these are what we call DSCR loans, or debt service coverage ratio loans. So basically it's a stated income deal for yourself. You don't have to provide your tax returns because some of us run losses and it's very hard to get bank loans, right? That's why there's this whole portfolio loan program, which is a perfect fit for what you're trying to do. And so basically they look at the income of the property based upon the debt, including taxes and insurance, and basically we calculate and we look at your debt service coverage ratio. So we look at the max loan proceeds we can get based on the income of the property versus the debt. And that's as simple as it is. So many investors that can't qualify, maybe they're self-employed, maybe their income, they've got too many rental properties in their own personal name. And that's why portfolio loans are the way to go. You can finance these in your LLC or your corporation. They don't show on your personal credit report. There's many benefits of these investor cash flow loans. So that's really the end all be all. Really, it's just really based on what's the income of the property, what are the expenses, and that's your max loan proceeds. Basically, we need a debt service coverage ratio of 1.25 or greater, and that'll help you right there. And so it's a simple way to move personal liabilities into your business. And that's one of the huge advantages. And you're not going to be limited to Fannie Mae guidelines saying, oh, well, you can have a max of 10 properties. You can have hundreds of properties. We can actually do a portfolio of multiple properties, one loan, blanketed against 5 or 6 rental properties. There's all these ways of doing it. You can, there's some investment groups that have, 100 property portfolio loan. And so that's how you're able to treat them more as a commercial loan and not get scrutinized as a borrower per se. So I hope that fills you in on investor cash flow loans. If you have any questions, feel free to reach out. I also have a rate quote link below. You can simply answer like 5 to 10 questions and we'll get back to you right away and let you know what the pricing looks like on your scenario. And these are 30-year loans. Some of them do come with prepayment penalties, 3 to 5 years. There's ways to negotiate that. You can even get a 1 or 2 year prepayment penalty, but they are more commercial-ish loans, so expect to have a prepay penalty on these loans. But if you're looking for long-term fixed rates and you don't want to go the bank or credit union route because they're going to scrutinize you from a global cash flow perspective, these are great lending tools to know about. Anyways, thank you so much, and I appreciate you. Be sure to like, subscribe, and share with your colleagues. You can watch us here on YouTube, or maybe you're listening on Libsyn or iTunes or Stitcher, one of those platforms. Really appreciate you. You can also visit investorfinancingpodcast.com. You can watch all of our videos there. You can even contact me if you want to talk. And my calendar links below too as well. If you want to get on my calendar, I'm happy to have a consultation with you and talk about real estate and financing. All right. Have a great one. Thank you so much.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.